Everybody, we're going to begin. If we can ask you to either take your seat or kind of calm the conversations down, because we're going to have a conversation regarding technology. Technologies that include artificial intelligence and blockchain, and even diving into the world of cryptocurrencies. All right, Adrian, you guys ready to get going?
We're talking watches.
Check.
Watches.
We're in Switzerland. You talk watches.
We are in the world of watches. All right, good evening, everybody. I'm Dustin Plantholt. To my right, we have Daniel and we have Adrian. He is not Monty. Monty was not able to make it to this panel. We're first going to begin by short bios, and then we're going to dive into a conversation on technology. And there's a lot of signs here in Davos that are talking about artificial intelligence, as well as cryptocurrencies. So we have our experts. So let's start with you. Daniel, tell us a little bit about yourself.
So I'm the founder and CEO of the Futurum Group. We are a technology research and advisory firm. We work with 400 large technology companies around the world, advising on topics from silicon to SaaS, also focus on policy, government regulation, and I'm a 7-time best-selling author. And my most recent book was called Human Machine.
Human Machine, wow.
Wow, got to live up to that, Adrian. Come on, man.
Spectacular. Well, thank you to Dustin for putting together such an excellent panel. I'm very honored to be sitting here next to you, gentlemen, as well as speak up about the cryptocurrencies overall. My name is Adrian Zdunczyk. I am a CMT chartered market technician. I'm a founder and CEO of the Burb Nest, that is basically a trading education and blockchain enthusiast education platform that is accredited. And this space is the space of cryptocurrencies is filled with scammers. It's filled with unreliable education, misinformation, with very faulty and sketchy people, which is why it's very important for me to be this voice of reason while talking to institutions, while onboarding banks and hedge funds, and to provide a sound financial advice that is quant-based, that is number-based, that is fact-based, rather than just some random opinions, and eventually spreading the word in terms of the education is where it starts, doesn't it?
It sure does, and I think that's the heart of education. It begins with yourself, of what you're learning. So we're going to start with you, Daniel. You have done a number of things in your career, and you're the ripe old age of 42. You've come to Davos. What are you looking to learn?
Sure. Look, you had to see 2024 being the year of AI, and so it was an unbelievable exponential curve of interest, of adoption, and while Davos has historically taken on a lot of social issues, and I think it's important it continues to, you knew that this year it would be led by artificial intelligence, and you knew that artificial intelligence would be in focus. So what I called 23 the year of the GPU. It was the year of the infrastructure investment. This is the year of implementation. And I really want to understand from the world's leaders. I want to talk to the CEOs of businesses, of our clients, and of course their clients, to understand now, how are we making the transition from the concept, the idea, the early implementations to full deployment across organizations to get value, to get scale, to get growth, but also how is this going to impact our society? We're going to augment, we're going to upskill, we're going to add, and we're going to have to put AI alongside crypto, alongside blockchain, alongside sustainability, alongside equality, to create what's going to be the next economic wave. And we know that this is starting here. So being here in Davos is a great place to talk to all those leaders about this.
But artificial intelligence has been here for some time. I remember, watching movies when I was younger, and they were talking about AI taking over the world, but it didn't do that, or did it?
So it's this kind of idea of the sentinel moment. I had a great conversation this morning with Tom Siebel, C3AI CEO, and he was talking about this exact thing. He said, everyone's worried about kind of this AGI moment, this sentinel moment. Hal, open the door. Anybody that's seen 2001: A Space Odyssey knows the door doesn't open. It's pretty scary. Truth is, though, that's probably not the biggest risks with AI. We have bigger risks with AI. I listened to the head of the International Monetary Fund today, IMF, talking about how one of the biggest risks is the further inequality that it's going to create as AI. It's not going to displace the people at the top of the food chain. It's going to definitely create major problems for those in lower socioeconomic statuses. So how are we solving that problem? As we create, every economic and every industrial revolution has actually led to more, not less jobs. But we're in that moment. And yes, AI has been around like 40 years, 45 years. It's not actually a new thing, but it had its Apple moment last year. It had that moment when the world suddenly said, okay, I've finally found a use case of AI that I understand and that I can utilize, and now it's seeing exponential demand and growth. November 2022 marked that moment when people first touched ChatGPT and they go, oh my God, I get it. And so now we have to actually deal with the fact that it's writing for us. How do we deal with IP rights, governance? How do we know that it's accurate? We're going into 2024, an election year in the United States, a major election year that could shape the entire world. And we don't even know if what we read is real. We don't know because, everything from deep fakes to misinformation being spread on social platforms that are not properly monitored, or that, the systems can't actually tell fact from fiction. And how do we do this? How do we make sure that the world continues to go in a good direction when AI creates these really meaningful risks? And this is something that right here, this is a place that this should be being discussed. Leaders, enterprises, private, public, it's a big deal.
So you're shaking your head over there, Adrian. You agree?
Well, I do. So as a matter of fact, AI is a tool. It's a tool that is just a tool, and it's a big of a tool itself, right? A tool means it's an opportunity as much as it is a threat. Same as Nobel basically came up with a dynamite, right? Same with as the gunpowder was created. Eventually, it is us that give a meaning to the tool rather than the tool giving the meaning to the human, right? That translates to being the matter of a context. So on one hand, AI, when approached positively, when approached in a constructive and a structured manner, education-based manner, planning ahead rather than just catching up with what's happening, I think it brings a lot of opportunity. I think it brings a lot of good result overall, right? Eventually, the entire movement on trying to regulate AI or in the middle of observing how dramatically fast it was growing, probably was a little bit of a late reaction, right? So as a matter of fact, while planning on innovation that should be controlled, and in order for it to be controlled, it needs to be regulated. So, the regulation is something that the blockchain industry, the cryptocurrency industry has been battling for a very long time. And as a matter of fact...
I apologize. Excuse me, sir. When we have people up here, excuse me, sir, can't have you on the phone when we're talking. Respect, please. Continue.
Thank you. And the end of the day, what's happening from the regulatory perspective, also in the blockchain industry, translates to the opportunity. So when approached from the regulatory perspective, when there's regulations behind it, it provides enough security to play with it, to construct and play along with this tool to create better goodness eventually, right? However, it doesn't come without risk. And those risks need to be quantified, those risks need to be labeled, need to be named. But hey, isn't that why we have regulations?
So regulations are interesting, and it comes down to, and there's a company I work with, the CEOs here, called Root. It comes down to the root. What is the root of regulation? Coming from your side, Daniel, what do you see? I mean, working with technology companies,
yeah, we've worked closely with regulators, especially on large antitrust and global corporate affair, government affair deals. And regulation is complicated. We've got this challenge where the economy and regulation clash. For instance, for VCs to work, you need to have deals. And so when you see large companies and deals being shut down for startups, you saw Figma and Adobe recently get shut down, major deal, $20 billion deal. When a company like Figma is built, when investors put seed money in, they actually are looking to invest based on the idea that at some point they could exit with a meaningful return. At the same time, competition, right? So you've got this conflicting issue, historically, like telephone, historic telephone companies, there would be real monopolies. And now monopoly, you got these questions about consumer harm and competition. The idea used to be, well, does it do consumer harm? Well, a lot of things like Meta, the type of consumer harm it might do, like privacy, is not what's actually being regulated. Is Meta getting too big? And are they eliminating competition before it gets created? But at the same time, consumers are actually having really good experiences on it. And so the meaning of antitrust is changing and the meaning of regulation is changing. And so going back to the AI thing, though, and specifically as it relates to government affairs and regulators have not been able to keep up with any of the technology trends. blockchain and all the scamming that you mentioned on crypto happened because regulators couldn't keep up. Social, you got, Section 230 and all the concerns with election meddling and what's going on social platforms. Again, couldn't keep up. You have policymakers that still don't understand the difference between Google, Meta, Microsoft, and from search and Amazon and commerce. They literally don't understand the technologies. How in the world are they supposed to regulate something they don't understand? And now we have AI, which you have the economic value. I've heard numbers as high as 4 trillion. Talked to Arvind Krishna, CEO yesterday of IBM, and he actually said to me they believe it's $4 trillion of economic value that's going to be created in the near term because of AI. And so the enterprises, of course, the corporations are of course going to be pushing full speed ahead, and regulators are going to be playing catch up the whole way. So expecting regulators to actually be able to get in front of AI, zero chance. I think it's all about figuring out the right things to focus on, like how do we make sure democracy is not at stake, rather than worrying about, should AI be allowed to write my kids' essays, and do my kids need to learn how to write in a world of generative AI? Totally different topic for policymakers.
And so how are you seeing it in the world of finance tie in?
Well, speaking of the roots, eventually what attracts a lot of investors is the volatility, is the betting side of it, right? Speculating on volatile assets such as crypto has its own pros and cons. Eventually, there are many millionaires, there are many self-made billionaires, there are many self-made multi-billionaires in the crypto space. Some of them I happen to know very well. They are my close friends. And at the end of the day, what matters is taming this volatility. Taming this volatility means risk management. Risk management means perhaps not putting all your eggs into one basket, right? So cryptocurrency as a whole is just an asset class. And speaking of the trillions, $2 trillion asset classes of it right now. And it's on a very volatile, dominant bull market trend, which translates to rising opportunity for those who are invested and rising opportunity cost for those who are missing out. And the cost of missing out for Bitcoin means, for instance, 160% just last year, when compared with 25% return for the S&P 500, right? So the volatility aspect within S&P 500 is, for instance, quantified by the, metric named Sharpe ratio, which is basically quantifying the annualized returns and comparing that, putting that aside, not against the annualized volatility, the risk. And S&P 500 is Sharpe ratio neutral. It kind of just doesn't generate much of the health in the portfolio. It is just as a means of diversification. However, cryptocurrency is far more positive because it's generating much bigger returns. The volatility is bigger, true. For cryptocurrency, for Bitcoin, we're talking about annualized volatility of 40-50%, which is high. For S&P 500, that is 11, 12%. Maybe VIX is right now, implied volatility index is right now at 12.7% last time I checked. So there is multiple fold, 4 or 5 times bigger volatility in the crypto. However, this translates to even better return side. So investing and putting diversification stamp on cryptocurrency can boost their returns significantly. And this is not even my word. This is a word officially written and recommended by the supervising body of the central banks, by the Basel Committee, so that until January 1st, 2025, next year, the central banks globally are recommended to own between, more than 2% of crypto assets. Overall, having exposure of the official central bank reserves into cryptocurrencies, depending on what sort of cryptocurrency group that is, whether it's a Bitcoin, whether it's a smart contract token, and so on. And what it means eventually is that we are having and talking about the biggest players coming in right now. BlackRock, VanEck, all those biggest funds in the world have just got green light from the SEC to onboard trillions of dollars, billions of dollars on day one. For the ETFs, for Bitcoin spot.
So is this considered then like a new asset class?
It's been a new asset class. It is just an asset class, right? However, it's been more and more vastly recognized, especially getting the stamp of approval from the SEC. And we are talking about not some random numbers. The past record of the biggest interest financially was recorded for gold in the early 2000s. And the ETF brought $2 billion on the day one for the aggregated inflows. For Bitcoin, we're talking about $4.5 billion on day one. This is more than 100% greater interest nominally for Bitcoin than it is for the gold, right? And gold, needless to say, is one of the biggest asset classes ever. So that translates overall to this opportunity being recognized based on the institutional level. The regulations are here. For Europe, there is a MiCA regulation, market in crypto assets, right? The European Data Act, the whole GDPR, it's all consistent and complementary with what's happening in the crypto. So eventually what it means is that everybody who's deliberately choosing to deny the reality, to deny the numbers, deny the 160% growth on Bitcoin last year, deny the 70% annualized return for Bitcoin over the years. This is denying the reality. And I don't know a single person who's victorious, who's successful by denying the reality.
So talking about then asset classes, I mean, looking at data, there are companies that buy data and they sell data. Is data itself an asset class?
I don't think by definition, but it's certainly being monetized at scale. I do want to comment, I think 160% on Bitcoin is really interesting. I think it was about 800% on Solana. And so I'm just saying, like, depending on which,
you're right,
in which utility you're focused on. Now, anyone that rode the 22 and some of the 21 wave also knows what it's like to lose 90% in a very short period of time. When you believe in something, you actually keep your money in it. And,
It's irrational, isn't it?
Yeah, it is, isn't it? So data is really going to be an interesting thing because data is probably the most monetized asset class, yet by technical standards of how they define asset classes, it's not. But if you look at the development of the most unicorn companies, almost all of them entirely are data dependent. Whether it's been social platforms, media platforms, gaming platforms, the ability to connect, use data, optimize, drive next generation experiences is data dependent. Now, applications for business, data dependent. The entire generative AI movement is data dependent. I mean, you're grounded in data. Generally speaking, we don't truly know how the algorithms entirely work yet, but what we do know is how they kind of couple sentences together, are able to couple pixels together to create an image, create a video, to create a text stream. And so the ability for it to be as accurate and as grounded as possible is really the ability for it to have a big enough data set, which is why, we use we added a 1% use case of the world's energy last year to the training of these GPUs. We actually doubled the energy consumption in 1 year. So is it an asset? I mean, in many ways, if you're a business owner, an entrepreneur, it's absolutely an asset. What you uniquely can bring to market in your data is what is going to allow you to differentiate and position your company against the market.
Great explanation. So dive in then to cyber threats. Cybersecurity. I think there are things that are happening around the world we tend to not know, but from an IT side, we're being attacked.
Well, absolutely. As you create a bigger threat surface, as there's more technology and more AI, you're going to actually see more threats. I had a great conversation today with Dorette Dorr. She's the CTO of Checkpoint. She's been at Checkpoint for 28+ years. And so she's actually witnessed us move from kind of pre-internet era, perimeter security to now, to what we have today. And so as you see exponential data growth, actually, I think cybersecurity is one of the most underrepresented concerns, whether it's in cybersecurity, crypto hacking, right? People losing their fortunes has been a nation states focus right now is money and obviously tracking and being able to, and I'll leave that expertise to you. But every company right now is vulnerable. And so you've seen the rise of positions that focus nothing but protecting the vulnerabilities of an organization because your organization's longevity is at risk with a single hack. And we've seen that happen now. So AI will be used to protect threats, surfaces, observability. You're talking about large enterprises seeing up to 1 trillion threats a day. 1 trillion threats. So observability tools that can help you identify what are the 100 threats that your small cyber team, because no matter how big your team is, whether you're Microsoft or whether you're a 2-person company, it'll never be big enough to manage the scale of threats coming through. So AI, for instance, is going to be one of the biggest tools for managing it. It's also going to be one of the most important tools for hackers to successfully gain access to your data.
So talk about this a little bit, Adrian, because we hear the words that people got hacked, their crypto wallets. Did somebody actually hack the blockchain?
Well, very, very fair question, and I wanted to take a moment to comment on your excellent knowledge on the AI, right? I make a lot of mistakes, and one thing that I understand about AI is overall that it's a fast calculator. right? So it does execute fast calculations. That's what it does. And it can be used in multiple ways also to try to kind of like, game the systems, game the blockchain as it is. And as much as this fast calculator that AI is with the neural networks and genetic algorithms, eventually it arrives at the conclusions faster. So what it can do is it can help you kind of like, perhaps plan faster on how to hack a certain cryptocurrency project. Eventually, any project, not a protocol, any company that has centralized cryptocurrency emission, eventually can suffer from the cyber attacks anytime, any day, just like any other centralized company, just like any other company generating cash flow in a traditional sense. So as a matter of fact, when we think about that, there had been attempts to block blockchain, to stop blockchain, to hack blockchain. Well, and as long as there is the 51% takeover rate, let's say, for the available supply, it can really clog the blockchain. It can really clog it up, right? So it's going to kind of like stop it. It happened with Solana, speaking of which, by the way, right, last year. So the blockchain was turned off for several days, if I'm not mistaken, for 4 days, perhaps that was. So it is possible, right? And depending on the level of centralization, eventually centralization is a spectrum. Decentralization is a myth. It's impossible to achieve 100% decentralization, so it's always a spectrum. And we're speaking of this spectrum of centralization and decentralization. There's always going to be this centralized part of it that can be hacked, right? So there are many smarter people. Many of those are sitting in this very panel, smarter people than I could ever be, who can talk about the security aspects of it. Overall, I think blockchain is not really different than many other industries, than many different niches. There are risks to manage. Perhaps some of those are a little bit more exotic. However, technologically, there are good hackers out there.
There's also a lot of literacy issues. And I mean, something that WEF and Davos spends a lot of time focusing on is digital literacy. Because a lot of the hacks, a lot of the people that did lose everything, it was a lack of understanding and education. It was, using, the scams beside, I always laugh. I say, people want to understand how most enterprise hacks take place. Hackers would leave a USB drive on the ground and someone would be willing to pick it up and they're just chancing it. Someone just sticks it in their machine and they don't realize that, that person happens to work for Coca-Cola. They just literally gave us a backdoor entrance into some large enterprise or corporation. And by the way, people put their passwords on sticky notes and visual hacking. So, it's really funny because we see the movies, right? Or we see the shows where, cyberpunk kind of thing where they're sitting there dreaming up and hacking, and 99+% of the time it's some spear phishing attack where we click a link because, any of you guys ever seen those phishing where they text you and it'll be like, my employees get texts all the time from fake numbers that come from me. I just need you to help me with something. It's from Daniel. And some of them are smart, but some of them are dumb enough to reply. And they're tech analysts. And so these phishing attacks can be really compelling. So the hackers are never going to do the hard stuff. The Mr. Robot stuff, if they can do the easy stuff.
Adrian?
One very quick reference on that very topic. Very, very good point. Just the latest example of Gary Gensler, the chairman of the SEC. On the day of approval announcement of Bitcoin ETF, actually the day before, there was an apparent leak, as they called it, an apparent leak of information that some unauthorized tweet went out via the official SEC's Twitter account, X account. That tweet was basically an approval of Bitcoin ETFs, of something that had been common for quite a long time. Overall, it doesn't matter. What matters is that the main financial authority, the security body in the United States, responsible for securing the investments, securing the financial markets, speaking loads of times about how insecure and how, not secure cryptocurrencies are, they played themselves to an extent, didn't they, right? So it means, Gary Gensler admitted that the SEC's account got compromised because there was a third-party attempt, meaning a person got access via a mobile phone to log into SEC's exchange account, the Twitter media account, and they didn't have two-factor authentication.
By the way, all they'd have to do to solve that is arbitrage all the trades. Somebody made a fortune because that tweet came out and the Bitcoin went up $2,000 or $3,000 in about 2 seconds and then went right back down. So someone literally probably hedged that made the money, and then trade. I'm saying so. I'd follow.
So-
It's harder to follow the
All right,
blockchain.
so
but-
as we only have 4 minutes remaining, I'd like, Daniel, you to talk to those on the sideline, or those CEOs that are looking to embed new technologies, or maybe have been a little reserved.
Yeah.
Give them the step. Here's what you do first.
So the Futurum Group intelligence arm actually did some research, talked to over 1,000 respondents globally, leaders of companies, and to better understand intent around AI. And we just finished this survey. And one of the most interesting things that came out of it, as I said, last year was the year of GPU. This is the year of implementation. Is there's a 300% growth expectation of companies that will spend multiple millions in AI this year. The reason I point that out is, one is knowing companies are going to move fast now from proof of concept to implementation. So knowing that should provide senses of urgency for you. What are the leaders really looking for? Well, it's two things you should be looking for. It's the expertise, because there's kind of like crypto, in AI too, any trend line, there's going to be a glom of consultants that are going to say, we know what we're doing, work with us. So it's going to be finding that right partner, finding that right technology, and then it's going to be, of course, the speed of implementation. How fast can you implement new technologies and put them to work for your business? If I was leading a company right now, I would be looking at, you remember big data, the big data? The big data delusion and the AI delusion is very similar to me. You got to pick a few things in your business. If you're a smaller company, you got to pick the certain proof of concepts and get them to speed faster. What are the biggest challenges in your market? And then every research I've done on digital transformation over the years has found a couple of things. One is culture is going to be really important to change, no matter how much technology you can put into place. And two is the mistake most companies make is that they find the process in its current state and then try to layer the technology directly on it and continue to do it the same way. And what I'm saying is real disruption is looking at a process and tearing it down to the absolute ground, or if you're building a house, tearing it down to the studs and being completely willing to reimagine how that technology could change your business, even if it changes you directionally, shape, or your product. And most people don't do that. They'll say, oh, we're going to digitally transform our business. We're going to add AI to our sales process. We're going to write the same letter. We're just going to use AI to send it to more people. Well, maybe that letter needs to be re-envisioned, and maybe the way you communicate and the channel you communicate on, and heck, maybe there's something that even I'm not thinking of.
And same for you, Adrian. Michael Saylor was one of those, he went all in. But there are a lot of companies that don't want to go all in on their treasuries into this space. What should they do?
Very good question, Dustin. So extremism is a risk on its own. Being overconfident is a risk on its own. It's a bias. And since institutions are constituted and constructed by the people, institutions suffer from the biases as well. So something that I face very often when I talk to institutions and I give the financial advice, speaking of the cryptocurrencies, in a quantifiable manner, I meet something that I dare call institutional bias. Institutional bias means cognitive dissonance. It means denying the reality, means ignoring the numbers that are happening, ignoring 160% growth over the last year. And overall, seeking for this confirmatory biases and having a list of 100 pros and just one con, for instance, for Bitcoin, right, being whatever that label is, it's going to focus only on the negative side while ignoring all the rest. So we're talking about a lot of conservatism as an unwillingness to open the mind to accept the new opportunity. And in cryptocurrencies, the opportunity cost is the greatest one. So fighting this institutional bias can happen in only one thing. And I read a book by an excellent Israeli novelist, Daniel Kahneman, about noise and about, systems of thinking. And Daniel Kahneman mentioned that when there is, in every single choice that we make, there is noise, and there is more of it than we think. It's driven by our biases, it's driven by our overconfidence very often, by our hindsight bias. We're full of psychological traps. What it means and what it does is it translates to us rejecting and ignoring the opportunities. So being actively open-minded and challenging our own opinions instead of remaining conservative about what we think is the step one. So having this open-minded approach, actively open-minded approach, then the education is where it starts. Then it is about calling to the mainstream, calling to the masses, and providing technological aspects to it.
And how do we learn more about Futurum Group?
So definitely, still on the web, even though it's not as cool as it once was. So www.futurumgroup.com, and of course, I'm a pretty prolific tweeter. I still love X. I don't know. I still call it Twitter though. But at Daniel Newman, and then put UV on the end, and it's a very active account. And I think a lot of my sort of ongoing ramblings, I also contribute on Forbes, Market Watch, and regularly on CNBC and other channels.
Congratulations. Probably I'm gonna repeat the same for Twitter. It's gonna be Adrian Zduńczyk, CMT, Charter Market Technician. So you can search under those terms. There's only one Charter Market Technician that is crypto native in the world, and that is me. So it's easy not to confuse it. There's only one Charter Market Technician in Poland, and that's only me as well.
Great hair.
Thank you. And I wish there were many more people who are financially literate in terms of promoting cryptocurrency in a reliable fashion. So that's my mission. And if you will, I'm going to be there to ask and answer any questions. Please. Thank you.
And I think we are out of time because we have another panel beginning. So I would like to thank our audience. Thank you. I know it's been a long day for most of you, and my incredible panelists. Thank you so much. And Greek House, thank you for opening the home for us. So
Thank you, Dustin.
see you in the next one.